Bismillahirrahmanirrahim. This is the sixth video on accrual accounting, and we will solve exercises on worksheet comprehensively. Please like, subscribe, and share my channel to search for accounting lessons and hit the notification bell button to alert you for the latest video. For all of your questions, comments, and suggestions, please put them in the comment section below. And for webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Accounting is AK. We hope that this video helps students in their academic development and teachers in enhancing their lesson plans and teaching methodologies. So let us start with the first exercise. The steps in using a worksheet are presented in random order below. List the steps in the proper order by placing numbers 1 to 5 in the blank spaces. So the first step is to prepare a trial balance on the worksheet. The second step is to enter the adjustment data. The third step is to enter adjusted balances. The fourth step is to extend adjusted balances to appropriate statement columns. And the last step is to total the statement columns, compute net income or loss, and complete the worksheet. Let us move on to the next exercise. The ledger of Lay Company includes the following unadjusted balances: prepaid insurance, service revenue, and salaries expenses. Adjusting entries are required for these three, and we have to enter the unadjusted balances and adjustments into a worksheet and complete the worksheet for all the accounts. So first of all, we are going to prepare the trial balance, and here we are going to record the insurance, prepaid insurance balance, that is 3000, that will be in the debit. Then we have service revenue, that is 58,000. And then finally we have the salaries expense, 25,000. Next, we have to make adjustments, like expired insurance is 1200, so prepaid insurance is credit by 1200, and insurance expense is debit by 1200. Then services provided 1100 but unbilled and uncollected. So accounts receivable is debit by 1100 and service revenue is credit by 1100. Then accrued salaries payable is 800. So salaries expense is debit by 800 and salaries payable is credit by 800. Next, we are going to record the information in the adjusted trial balance, and for this we will take the balance of the trial balance and the adjustments to get the adjusted trial balance. So we have a debit of 3000 and we have a credit of 1200, so this will be subtracted and it will be having a debit balance of 1800. Service revenue, both of them are in the credit, so they will be added and recorded in the credit column, that will be 59,100. Salaries expense, you can see both of them are in the debit column, and so that's why they will be added, 25,800 in the debit column. Then we have accounts receivable in the debit column. Salaries payable is in the credit and insurance expense is in the debit column. Next, we are going to prepare the income statement, and to prepare the income statement, we will take the information only from the adjusted trial balance. So, um, prepaid insurance, this is an asset. This will be recorded in the balance sheet 1800. Service revenue is an income statement item. This will be recorded in the credit. Then we have salaries expense. This will be recorded in the income statement on the debit side. Then we have accounts receivable in the debit column of the balance sheet. Then salaries payable in the credit column of the balance sheet, and finally insurance expense in the debit column of the income statement. Let us move on to the next exercise. The following selected accounts appear in the adjusted trial balance columns of the worksheet for Bath and Company. We have these set of accounts. Indicate the financial statement column, income statement, balance sheet, etc., to which each balance should be extended. So we have accumulated depreciation. This will be recorded in the credit column of the balance sheet. Depreciation expense in the debit column of the balance sheet of the income statement, sorry. Bath and capital in the debit column of the balance sheet, and this will be in the on the credit column, sorry. Then we have drawing in the debit column of the balance sheet, service revenue in the credit column of the income statement, supplies in the debit column of the balance sheet, and accounts payable in the credit column of the balance sheet. Let us move on to the next exercise. The steps in the accounting cycle are listed in random order. Below, list the steps in proper sequence, assuming no worksheet is prepared by placing numbers 1 to 9 in the blank spaces. So, the first step is to analyze the business transactions. The second step is to journalize the transactions. The third step is to post to the ledger accounts. The fourth step is to prepare a trial balance. The fifth step is to journalize and post adjusting entries. The sixth step is to prepare an adjusted trial balance. The seventh step is to prepare the financial statements. Eighth step is to journalize and post closing entries. And finally, to prepare a post closing balance, trial balance. So, this will be the ninth step. Let us move on to the next exercise. N. Batan is preparing a worksheet. Explain to N. Batan how he should extend the following adjusted trial balance accounts to the financial statement columns of the worksheet. So, service revenue, this will be in the credit column of the income statement. Utilities expense, this will be in the debit column of the income statement. Then notes payable, Bath and capital, and accumulated depreciation, they will be in the credit column of the balance sheet, and accounts receivable in the debit column of the balance sheet. Let us move on to the next exercise. The worksheet for Adam Company shows the following in the financial statement columns. We have drawing, capital, and net income, and we have to prepare the closing entries at December 31st. So first of all, we are going to close the net income, and this will be closed by debiting the income summary by 29,000, and the owner's capital will be credited by 29,000. Then we are going to close the drawing. For this, we will debit drawing by 22,000, and the capital will be debit by 22,000, and drawing will be credited by 22,000. Let's move on to the next exercise. The trial balance of the worksheet for Bresco company at June 30 are given below, and we have these set of other data 1, 2, and 3, and we have to enter the trial balance on a worksheet and complete the worksheet. So you will see in the next slide that this is the trial balance, and this trial balance is recorded in the trial balance column. You can see this is the same as it was on this slide, and we have the same amounts as well. uh, then we are going, let me clean up this. And I'm going to use these three in this worksheet. So first of all, a physical count reveals 300 of supplies on 300 of supplies on hand. Now we have supplies of 1880, and we have supplies on hand for 300. That means supplies for 1580 has been used. So supplies will be credited by 1580, and supplies expense will be debit by 1580. Next, the other one is $100 of the unearned revenue is still unearned. So we have unearned revenue of 240, and from this 100 is still unearned. That means 140 has been earned. So unearned revenue will be debit by 140, and service revenue will be credited by 140. Then we have accrued salaries of 280. So salaries will be debit by 280, and salaries payable will be credited by 280. So now we make the total, and the total will be 2000, and the two columns are equal, they have matched, and that means we have recorded them correctly. Next, we from the trial balance and the adjustments together, we are going to prepare the adjusted trial balance. So you can see that we have a cash, accounts receivable, 2320 and 2440. Then we have supplies. We can see this is 180 in the debit and 1580 in the credit. That means it has to be subtracted, and the balance will be in the debit column for 300. Then we have accounts payable in the credit 1120, unearned revenue in the that is 240 in the credit and 140 in the debit. So that means we are going to have a credit balance of 100. Then we have the capital in the credit column, so we will be recording it in the credit column of the adjusted trial balance. Now service revenue, you can see both the amounts are credit, so they are going to be added, and that is equal to 2540. Then we have salaries expense, both of them are in the debit, so they will be added, that is 840. Then we have miscellaneous expenses 160. Then we have supplies expense, one the debit 1580. Salaries payable in the credit 280. And now we are going to make the total, and the total is 7640, and this is also 7640. Okay. Now from the adjusted trial balance, We are going to record all this information in the income statement and the balance sheet. Now we have cash, accounts receivable, supplies, accounts payable, unearned revenue, capital. All these six items are for the balance sheet. So we will be recording the debit amount in the debit column, that is 2320, 2440, 300, and then we have 1120, 100, then we have 3600. Next, we are going to let us see what are the other items. We can see that we have service revenue 2540. This will be in the credit column of the income statement 2540. Then we have salaries expense in the debit. These are the set of expenses 840, 160, and 1580. And finally we have the salaries payable 260. This is in the credit of the balance sheet 280. Next we are going to make the total, and the totals are going to be like this. We have two we have the total 2580, and we have 502580, 5060, and 5100. Now you can see that this is this is 2540. So you can see that the revenue is less than the cost. That means this is a loss, and the loss will be recorded in the debit column of the balance sheet also. Now we make the total, and the total is 2580. This becomes again 2580. This is 5100, and this is 5100. So that's how we complete the worksheet, and let us move on to the next exercise. Now, at the end of its first month of operations, Watson Answering Service has the following unadjusted trial balance. So we have the unadjusted trial balance, and these are the other data. We have to prepare a worksheet, prepare a classified balance sheet, assuming 35,000 of the notes payable are long term, and we have to generalize the closing entries as well. So first of all, we are going to complete the worksheet. And we will put, now you can see that the trial balance has simply been copied from the question. You can see we have the trial balance, we have the debits, and we have the credit, and the total is 77,300. That is what we have copied, the whole information. This is from the question as such. Then we look into the adjustments. As you can see that insurance expires at the rate of 200, and you can note that this is worksheet is for the month of August only. That means it is only for 1 month. So insurance expires at the rate of 200 per month. So we have prepaid insurance, and this will be credited by 200, and insurance expense will be debit by 200. Then the second one, 1000 of supplies are on hand. Now you can see that we have supplies for 1300, and from this 1000 are on hand, that means 300 has been used. So supplies now will be credited by 300, and supplies expense will be debit by 300. Then the third one, monthly depreciation on the equipment is 900. So depreciation expense is debit by 900, and accumulated depreciation is credited by 900. Then interest of 500 on the notes payable has accrued. So interest expense is debit by 500, and interest payable is credited by 500. So now we make the total, and the total is 1900 for both the columns. Uh, Next, from the trial balance and the adjustments together, we are going to make the adjusted trial balance. So you can see that we have cash, accounts receivable, and then 1300 minus 300. We will look into these balances. So first of all, we have cash 5400. We have 2800 for accounts receivable. Now supplies 1300 is in debit and 300 is in the credit. So the balance will be 1000 in the debit column. Prepaid insurance 2400 in the debit and 200 in the credit. So this will be subtracted, and it will be in the debit column, that is 2200. Then we have equipment. This is in the debit, 60,000. Then we have notes payable, accounts payable, owner's capital, owner's drawing. Now these three items rather are on the credit: 40,000, 2,400, and 30,000, and 1,000 in the debit. Then we have service revenue 4,900 in the credit, and we have three expenses in the debit: 3,200, this 60,000 is in the debit column here. Okay. So next, so we have 3,000. We have 3,200 of salaries and wages, 800 for utilities expense, and 400 for advertising expense. In addition to this, there are expenses of 200, 300, and 900. Then accumulated depreciation in the credit 900, interest expense in the debit 500, and 500 for interest payable in the credit column. Now we make the total, and the total is 78,700. Okay, now we are going to record in the income statement and the balance sheet, and for this we are going to use only the adjusted trial balance. We are going to use only the adjusted trial balance, and you can see that cash, accounts receivable, supplies, prepaid, equipment, notes payable, accounts payable, owner's capital, owner's drawing, All these items are for the balance sheet. So we simply copy it in the balance sheet, debit amount in the debit column and credit amount in the credit column. 5,400, 2,800, 1,000, 2,200 and 60,000. Now they are for the credit debit, and look at the credit columns: 40,000, 2,400 and 30,000. Then we have the owner's drawing in the debit for 1,000. Now next we have the we have service revenue, so this will be in the credit of the income statement. Then we have the expenses: 1, 2, 3, 4, 5, 6, 7. So we have in there, they will be recorded in the debit side of the income statement: 3,200, 800, 400, 200, 300, 900 and 500. Now accumulated depreciation, this is for the credit column of the balance sheet. 900, oh sorry, accumulated depreciation is 900 in the credit column, and that is so this will be recorded in the credit column. And finally we have the interest payable 500, and this will be in the credit column of the balance sheet. Now we make the total, and the totals are 6,300. Then we have 4,900, 72,400 and 73,800. Now you can see that the revenue is less than the expenses, so that's why this will be recorded in the there is a loss of 1,400, and this will be recorded on the debit column of the balance sheet also, 1,400. So now we make the total, and the totals are 6,300, 6,300, 73,800, and this is 73,800. Okay, so this is what we have done right now. And then so we have prepared a worksheet, and I have put this information in a Excel sheet, and I hope this is much easier for you to read. And we look on to the second part now: prepare a classified balance sheet assuming 35,000 of the notes payable are long term. And for this I'm going to split my sheet into two. um, Now so this is the worksheet, and we are going to use this worksheet to record the information in the balance sheet, and let us see how we do that. Now, the balance sheet items are going to be recorded from the balance sheet column of the worksheet, and you can see that we have cash, accounts receivable, supplies, prepaid insurance. So we are going to have the cash 5,400, then we have 2,800, 1,000, and 2,200. So when we make the total is 11,400. Then we record the property, plant, and equipment, and you can see equipment is for 60,000, and so equipment is 60,000, and from this we are going to subtract the accumulated depreciation of 900. So this is equal to 59,100. So the total is 11,000 plus 59, that is 70,500. Next, we prepare the liabilities and owner's equity, where we have notes payable, accounts payable, and interest payable. Now you can see that the notes payable is 40,000. From this, 35 are long term. So the balance is 5,000 for the notes payable. 5,000. Then we have accounts payable of 2,400, and then we have interest payable of 500. So when we make the total is 42,900. Then we have long-term liability, that is notes payable, and this is 35,000. So the total liabilities are 42,900, and the owner's capital, let us look into the owner's capital. Now we have the owner's capital of 30,000. From this we are going to subtract the loss of 1,400 and the drawing of 1,000. So this is equal to 27,600. And now we make the total, and the total is 70,500. So that's how we are going to prepare the balance sheet from the worksheet. And next we are going to prepare the closing entries, and for closing entries we are going to close all the temporary accounts. And to close the temporary accounts, we are going to debit the service revenue, and this will be debit by 4,900. And income summary will be credit by 4,900. Then we are going to credit all the expenses that are there. So we are going to credit the salaries and wages expense by 3,200. Depreciation expense is credited by 900, utilities by 800, interest expense by 500, advertising expense by 400, supplies expense by 300, insurance expense by 200. And if we make the total of these expenses, this is equal to 6,300. So that is 6,300. So that's how we close the revenue and the expenses, and now we have to close the income summary. And you can see that there is a loss of 1400, and this loss will be record income summary will be closed by debiting the owner's capital by 1400, and income summary will be credited by 1400. Finally, we are going to close the owner's drawing by debiting the owner's capital by 1000, and owner's drawing will be credited by 1000. So that's how we are going to do this. We have completed the three things that were required. We have prepared the worksheet, we have prepared the classified balance sheet, and now we have generalized the closing entries as well. Let us move on to the next exercise. Now, the adjusted trial balance columns of the worksheet for Goody Company are as follows, and what we are supposed to do is we have to complete the worksheet. So first of all, let us complete the worksheet. Now we have the adjusted trial balance. That means trial balance and adjustments have already been done, and they have been summed up together to have this adjusted trial balance. And don't forget that the income statement will record the revenue, expenses, and the balance sheet will record assets, liabilities, owner's capital, and profit and loss. So 1, 2, 3, 4, 5, 6, 7, 8, 9. These items are for the balance sheet. 13,752, 7,840, 2280, 23, 20, 23050. Then we have the accumulated depreciation 4921, 5700, 5672, 30,960, and drawing in the debit column 3650. Then we have the revenue 15,590. Revenue is for the income statement. On the credit side, 15 15,590. Then we have the expenses, and 1, 2, 3, 4, 4 expenses. So 10,840, 760, 671, and 57. So now we make the total, and the totals are 12,328, 15,590, 50,572, 47,310. Now you can see that the revenue is more than the expenses. That means there is a net income, and the income is for 3,262. That is total revenue minus total expenses. And because this is the income will be recorded in the credit column of the balance sheet. Now we make the total, and as you can see that the total is 15,590, 15,590, and this is 50,572, 50,572. Okay, So we have completed the worksheet, and now with the help of the worksheet we are going to prepare the income statement, owner's equity statement, and a classified balance sheet. So let us see how we do that. And before we solve it, once again I have prepared the this worksheet in a in the Excel sheet as well. I hope it is much better to read and understand than this sheet. And I am going to split the screen now into two parts to solve this exercise. Okay. So we have to now we have to prepare the income statement, and to prepare the income statement we are going to use the worksheet. And obviously the we have revenue of 15,590, and there are expenses. So we have revenue of 15,590. Then there are expenses: salaries expense 10,840, rent is 760, depreciation is 671, and then interest expense is 57. Okay. So now we have the total of these expenses, that is 12,328. So the net income is 3262. And now we prepare the owner's equity statement. We start with the owner's capital, that is 30,960. Then we have the net income, and the net income is 53262. We have calculated in the income statement also. So the total is 34,222, and now from this we will subtract the drawing, that is 3650. So the ending capital is 30,572. Next we are going to prepare the balance sheet, and for this we are going to use the balance sheet items from the worksheet. But before that I will clean up this part. And now we prepare the balance sheet. So when we prepare the balance sheet, we have the current assets, and we have the assets recorded in the balance sheet on the debit column. So we have cash. Cash is 13,752. Then we have accounts receivable 7,840. Prepaid rent 2,280. So the total current assets is 23,872. Then we are going to record the equipment. Equipment is 23,050. And from this we are going to subtract the accumulated depreciation, that is 4,921. So the balance for equipment is 18,129, and the total of assets is 42,001. Then we look into the current liabilities, and these are notes payable accounts. You can see here we have account notes payable, notes payable, accounts payable, interest payable. So we have 3, 5,700. Then we have 5,672, and then finally we have 57. So when you make the total is 11,429. Rather here 11,429. Now we have the owner's capital, and we have recorded this in the owner's capital as 30,572. So we will simply copy over here 30,572. We make the total, and that is 42,001, and you can see that the assets are equal to liabilities plus stockholder equity. And then they say, so we have prepared the income statement, owner's equity statement, and a classified balance sheet. Now we have to journalize the closing entries, and once again, when we close the journal entries, we close all the temporary accounts, that is revenue, expenses, income, and or loss, and the drawing. So first of all, you can see that service revenue is now debit because we have to close it. So 15,590 is debit, and 15,590 will be credit for the income summary. All the expenses are going to be credited now because we are closing. So 10,840, 760, 671, and 57. So the total is 12,328. Next, we are going to close the income summary, and you can see that there was a net income, and if there is a net income, then owner's capital is going to be credit now by 3,262, and income summary will be debit by 3,262. Finally, we will close the drawing, that is 3,650. So capital is debit by 3,650, and drawing is credit by 3,650. Okay, so we have posted the entries in the income summary, and then they say use the T account. So let us make the T account for the income summary. So now income summary is first of all credit by 15,590. So income summary is credit by 15,590. Then income summary is debit by 12,328, and then the income summary is debit by 3,262, and now if we make the total, it is 15,590 and 15,590. Next, so you can see that there is no balance, and if there is, after closing, the balance of income summary must be 0, and you can see there is no balance over here. Next, we are going to prepare the T goodie capital, and for T goodie capital, we have the T goodie capital was how much? The T Goody capital was 30,960 in the credit, 30,960. Then T Goody capital was credit by 3262, and it was debit by 3650. So the balance is 30,572. Obviously it has a credit, must have a credit balance. Okay. And finally, they say post the closing entries to income summary and T Goody capital. We have done that. Now we have to prepare a post closing trial balance. Remember, when we prepare a post closing trial balance, then all the information will be from the balance sheet only, because all the items of income summary, that is revenue, expenses, and the net income or loss, have been closed, so they will not exist now. So next we have the post closing trial balance, and for this again we have the balance sheet items, and we start with the debit items. So we have cash 30 in the debit, 13,572, and then we have 7,840, then we have 2,280, then we have 23,050. Then we are going to record the credit items, and they are given in the credit column of the balance sheet. So we have accumulated depreciation in the credit 4921, 5,700, 5672, 57, and the capital will be recorded from the T Goody capital ending balance, that is 30,572. So if you total, this is 46,922, and this is also 46,922. So this completes this exercise. We have first completed the worksheet. From the worksheet, we have prepared the income statement, the owner's equity statement, the balance sheet, and then we have recorded all the closing entries, and then finally we have prepared the post closing trial balance. Okay, let us move on to the next exercise. The adjustment columns of the worksheet for Mears company are shown below, and we have to prepare the adjusting entries. So these are the adjustments. So as accounts receivable is debit, and obviously service revenue will be credit by 600. Then we have insurance expense. Insurance expense is debit by 400, and prepaid insurance is credit by 400. Then we have depreciation expense, debit by 900, and accumulated depreciation, credit by 900. Then we have salaries expense, and salaries expense is debit by 500, and salaries payable is credit by 500. Okay. Next, now, assuming the adjusted trial balance amount for each account is normal, indicate the financial statement column to which each balance should be extended. Now, accounts receivable and prepaid, they should be extended in the debit column of the balance sheet. Now accumulated depreciation, salaries payable, they are going to be recorded in the credit column of the balance sheet. Then we have service revenue. This will be in the credit column of the income statement. Then we have salaries, insurance expense, depreciation. So all the expenses are in the debit of the income statement. Okay, so next let us move on to the next exercise, and we have to selected worksheet data for Nicholson company are presented below, and we have to fill in the missing numbers. Now you can see that accounts receivable is 34,000, and you can see that we have service revenue that has increased from 88 to 97. That is an increase of 9,000. So 34,000 minus 9,000 is equal to 25,000. Okay. Next we have supplies, and for supplies you can see that supplies are 700. Sorry, 7,000. And from this we are going to subtract the supplies expense, that is 5,000. So the balance now is 2,000. Then we have accumulated depreciation. You can see accumulated depreciation is 12,000 in the credit. And then there is depreciation expense of 10,000. So that makes 22,000. Then we have salaries payable, and you can see that for salaries payable no adjustments are there, so no liability recorded until adjustments were made. Next we have insurance expense, and for insurance expense we have nothing as far as insurance expense is concerned. So let us see how we progress into it. So insurance expense is now prepaid insurance is 26,000. And from this we are going to subtract the debit amount for prepaid insurance in the trial balance, that is 20,000. So this is equal to 6,000. Finally, we have the salaries expense, and you can see that salaries expense we have 49,000, and from this we are going to subtract the salaries expense, and the salaries expense is how much? Salaries payable 9,000. So for so salaries expense is 49,000. From this we will subtract the 5,000 salaries payable. So the actual salaries expense are 44,000. So this is how we record it, and then they ask us to prepare the we have to prepare the adjustment entries. For adjustments now, you can see that account receivable was debit by 9,000. Account receivable was debit by 9,000, and service revenue is credit by 9,000. Then we have insurance expense, and we have recorded insurance expense for 6,000. Insurance expense is debit by 6,000 and prepaid is credit by 6,000. Then we have supplies expense, and supplies expense are how much? Supplies expense are 5,000. So supplies expense are debit and supplies is credit by 5,000. Next we have depreciation, and we can see that depreciation is 10,000. So depreciation expense is debit and accumulated depreciation is credit by 10,000. Next we have salaries expense, and salaries expense was 5,000 and salaries pay bill is credit by 5,000 because we are not paying it right now. Okay. Next, let us move on to the next exercise. Now, Thomas Magnum began operations as a private investigator on July 1st. The trial balance columns of the worksheet of Thomas Magnum at March 31 are as follows. So, this is the trial balance, and then there are adjustments. You can see supplies on hand is 380. Now, supplies is 1050 and 380 is on hand. That means 670 has been consumed or they have been used. So supplies will be credit by 670 and supplies expense will be credit by 670. Then the second one, depreciation per quarter. Now here you see they are saying per quarter because we are preparing the worksheet on a quarterly basis. So depreciation expense is debit by 1,000 and accumulated depreciation is credit by 1,000. Then interest accrued on 6 months note payable issued on January 1 is 300. So interest expense is debit by 300 and interest payable is credit by 300. So we have then insurance expire at the rate of 200 per month. Then because this is on a quarterly basis, this will be multiplied by 3. So insurance expense will be credit by 607 by 600 and in prepaid insurance is credit and the insurance expense will be debit by 670. Okay, and then finally service provided but unbilled for 530. That means accounts receivable is debit by 530 and accounts receivable service revenue 530. Okay. And service revenue, where is service revenue? 530. Okay. Now service provided but unbilled total 530. So accounts receivable is debit by 530 and service revenue is credit by 730. So now we are going to make the total, and that is 3,100. Okay. Next, we are going to use the trial balance and the adjustments. We will be adding them together to get the adjusted trial balance. So cash is 11,400. Then we have accounts receivable. You can see this is in debit and this is also in debit, so they will be added and put in the credit debit column 6150. Then we have supplies. You can see it is in debit, and in the credit it will be subtracted. So the balance is, how much is the balance? Balance is 380. Okay. Then prepaid insurance, debit and credit, this will be subtracted. That makes us equal to 1800. Then we have equipment for 30,000. Notes payable, accounts payable, T Magnum Capital, drawing. So we just simply record this 10,000, 12,350 and 20,000. Okay. Now we have the drawing of 600. Then we have service revenue, and this will be, because both are in credit, they will be added up and put in the credit column 14,150. Then we have a list of exercises, and this will be recorded in the debit column 2,200, 1,300, 1,200, and finally we have 200. Okay. Then we look into the supplies expense. This is debit by 670. Depreciation expense 1,000. And then accumulated depreciation in the credit. Interest expense is 300 in the debit, interest payable 300 in the credit. Okay. And then we have insurance expense of, how much is the insurance expense? 600. I made a mistake. 3 times 200 is equal to 600. So sorry, insurance expense and prepaid insurance. So insurance expense is debit by 600, and here it is 600. Okay. So now we make the total, that is 57,800. Okay. Now we are going to use only the adjusted trial balance. We are going to prepare only the income statement and the balance sheet from the adjusted trial balance. So accounts receivable is in the debit column, 6150. Okay, so we have all these items are for the balance sheet: 11,400, 6150, 380, 1,800, 30,000, And then these items also are notes payable, accounts payable, Magnum Capital, and 600 of drawing are also for the balance sheet. 10,000, 12,350, 20,000, and 600. What else? Then we have um, the revenue, and revenue is for the income statement in the credit column 14150. And now we look into the expenses, salaries expense, travel expense, rent expense, miscellaneous, supplies, depreciation, interest expense, so, and insurance expense. So we have, let us put these values, and they are going to be in the debit column of the income statement. 2,200, 1,300, 1,200, 200, 670, 1,000, 300, and 600. Now, you can see that we have not recorded the accumulated depreciation. This is in the balance sheet on the credit side, and 300, this is also for the balance sheet on the credit side, that is 300. We make the total, and the totals are 7470, 14,150, 14,150. Sorry, 50, 53, 330, 5330. Sorry, this will be 43, 43,650. Now you can see that the revenue is more than the expenses. So this is a net income, and net income was 6,680, 7,470. So this is 6,680, and this will be recorded in the credit column of the balance sheet, and we make the total now, that is 14,150, 14,150, 5330, and 5330. So we have utilized the worksheet, and now we have to prepare the income statement, owner's equity statement, and a classified balance sheet. Once again, this worksheet I have put in an Excel sheet, and it is more convenient to read than my handwriting. And from this, we are going to use this to prepare the income statement, and for this again I will split the window into two. So we are going to prepare the income statement now, and we can see that we have the service revenue of 14,150. There are a set of expenses. These are supplies expense, 670, 1,000 for depreciation expense, interest expense is 300, insurance is 600, salaries is 2,200, travel expense is 1,300, rent expense is 1,200, miscellaneous is 200. So we make the total, expense, that is 7470. So we have the revenue minus expense, that will give us the net income of 6680, and this is what we have calculated in the worksheet as well. Next, we are going to prepare the owner's equity statement, and for this we have the owner's capital at the beginning, and that is 0. The investment is for 20,000, and the net income is 6680. So the total is 26,680. 26,680. From this we will subtract the drawing of 600. So that gives us 26,080. Now from this we are going to prepare the balance sheet. And once again we are going to use the worksheet. Now current assets are cash, accounts receivable. Cash is 11,400. Accounts receivable is 6150. Prepaid is 1800. Supplies is 380. And the total current assets are 19,730. To this we add the equipment. Equipment is 30,000. And accumulated depreciation is 1,000. So this becomes 29,000. The balance for equipment, and the total for the assets will be 48,730. Next we move on to the liabilities. We have notes payable, and notes payable are given over here, 10,000. Accounts payable 12,350. Interest expense is 300. So the total is 22,650. The capital we have just now calculated, that is for the owner capital from the owner equity statement, and that is 26,080. 26,080. So the total for the liabilities and owner's equity is also 48,730. Okay. So next we move on to the next exercise. Oh, still something is left over here in this exercise. So I will split the screen again into two parts. So we have to journalize entries from the adjustment column. So this is the adjustment column. And you can see that in the adjustment column, supplies expense is debit by 670, and supplies will be credit by 670. Depreciation is for 1,000. In the adjustments, that interest expense is 300 and interest payable is 300. Insurance expense is debit by 600 and prepaid is credit by 600. Then we have accounts receivable debit by 530, and service revenue will be credit by 530. Next, they ask us to journalize the closing entries, and to close the entries, we have to close all the temporary accounts. So service revenue will be debit by 14,150, and income summary will be credited by 14,150. In addition to this, we are going to we are going to credit all the expenses. So salaries expense is credited by 2,200, travel expense 1,300, rent by 1,200, miscellaneous are 200. You can see all these items are from the expenses that has been recorded, because now we want them to have a zero balance, and that's why we are crediting them all. So this is miscellaneous is 200, depreciation is 1,000, interest expense is 300, insurance is 600, and supplies is 670. So now when you add all these expenses, this is equal to 7,470. Next, we are going to close the net income. So income summary is going to be debit by 6680, and S Homes Capital will be credited by 6680. Finally, we will close the drawing, and the capital is debit by 600 and drawing is credited by 600. Okay. Next, now we go to the next exercise. And in this exercise, we have the trial balance, and then again there are some other data, and we have to utilize the worksheet above and complete the worksheet. So first of all, you can see a physical count reveal only 240 of roofing supplies. Now roofing supplies are for 1,100 and 250 in hand. That means 860 has been consumed. So roofing supplies is credited by 860 and supplies expense is credited by 860. Then depreciation for the March, you can see that we are doing for 1 month. So depreciation for the March is 200. So depreciation expense is debit by 200 and accumulated depreciation is credit by 200. Then unearned revenue amounted to 130 after adjustment. So this is for unearned service revenue, and now the unearned service revenue is 300, and this is after adjustment. That means 170 has been earned. So unearned service revenue will be credit by 170 and service revenue will be debit now by 170. Then we have number 4, accrued salaries are 350. So we have salaries expense debit by 350 and salaries payable is credit by 350. Okay. Now we make the total, and that is 1580. Now from the trial balance and the adjustments, we are going to prepare the adjusted trial balance. So we have 2,500 and 1,800. Then we have roofing supplies, debit and credit. That means it will be subtracted and the balance will be 240 in the debit. Then equipment is 6,000. Then accumulated depreciation is 900. Accounts payable is again for 1,400. Then what else? Now this is in the credit and this amount is in the debit, so the balance will be in the credit for 130. 300 minus 170 is 130. Then we have the capital for 7,000. We have the drawing for 600. Then we have service revenue 3,500 and 170. That makes 3670. Then we have again the expenses 350, 860, 200. So we have 350, okay, we have 700 in the debit and 350, so this makes 1050. This is 200, and then we have 860 and 200. Now this salaries payable is for the balance sheet in the credit column. Okay, now we make the total, and the total is 13,000. This credit will be recorded here as well in 350. So this will be 13,450. 13,450. Next, we are going to prepare the income statement from the adjusted trial balance, and you can see 1, 2, 3, 4, 5, 6, 7. These are for the balance sheet, so we simply copy them down: 2,500, 1,800, 240, 6,000, 900, 1,400, 130 and 7,000. Then we can see that there is drawing of 600 in the debit. Then we have the service revenue in the credit 3670. Then we have expenses 1050 and 200. And then supplies expense 860, depreciation expense is 200. What else? That's it. Now we make the total, that is 3670, and this is 2310. Obviously there is a gain at increase, there is a net income, and we will look into it. So this is 11,140, and this is how much is this? One three six zero minus 140. 9780. Okay. Now you can see that the revenue is more than the expenses. There is a net income, and this net income is for 1360, and this will be recorded in the credit of the balance sheet as well. So the total is 3670, and the total here is 11,140. Now this worksheet, I have put it in an Excel sheet. I will show you in a minute. And we have to prepare income statement, owner's equity statement for the month of March, and a classified balance sheet. So this is what I have put it over here in an Excel sheet for your convenience. And we will use this table or this worksheet to complete the other exercises that can be done. Now first of all, we are going to have record the income statement, and for the income statement For the income statement, we have service revenue of 3670. Then we have expenses, and these are 860 for supplies expense. Depreciation expense is 200. Salaries expense is 1050, and miscellaneous are also 200. So the total expenses are 2310, and the net income is 1360. Next, we are going to prepare the owner's equity statement, and you can see that the owner's equity was 7000. To this, we will add the net income, and that is 1360. So the total is 8360, and from this we are going to subtract the drawings. The drawings are 600. They will be subtracted, so the total is 7760. Next, we are going to prepare the balance sheet. And for the balance sheet, we are going to use the balance sheet column. And once again, we are recording them in a classified balance sheet. So we have all the assets and all the current assets, rather, first of all. So that is 240 for the supplies, 2500 for cash, 1800 for accounts receivable. So the total is 4540. Now equipment is for 6000, and accumulated depreciation is 900. So we have 6000 minus 900, that will give you 5100, and the total for the assets is 9640. Next, we prepare the liabilities and owner's equity, and they are going to be coming from the credit column of the balance sheet. So we have accounts payable 1400, unearned revenue 130, and salaries payable 350. So the total is 1880. Now, owner's equity is, we have calculated just now, is 7760. 7760. So the total is 9640. And you can see that the assets are equal to the total of the liabilities and owner's equity. Now next, we are going to generalize the adjusting entries from the adjustments. So we have the adjustments over here. And you can see that supplies expense is credited by 860, and roofing supplies is credited by 860. So supplies expense is debit and roofing supplies is credit by 860. Then we have depreciation, and depreciation was for 200. So depreciation expense is debit, accumulated depreciation is credit. Then we have salaries expense, and salaries expense is debit by 350, and salaries payable is credit by 350. Finally, we have unearned revenue, and unearned revenue is debit by 170, and service revenue is credit by 170. Next, we have to journalize the closing entries, and to close here, I have told you several times that for we are going to close all the temporary accounts. So we have salaries, service revenue 36. Uh, we three. How much is this? Yes, it is 3670. Income summary credit by 3670. Then we will close all the expenses by crediting them, and that's why roofing supplies expense is credited by 860. Depreciation expense is credited by 200. Salaries expense is credited by 1050, and miscellaneous is credited by 200. So the total is 2310. Next, we are going to close the income summary, and income summary, you can see there was a income of 1360. So income summary is debit by 1360, and the capital is credit by 1360. Finally, we are going to close the drawing. So capital is debit by 600, and drawing is credit by 600. So gentlemen, this completes the sixth video on accrual accounting. I hope you have enjoyed this presentation, and if you found value in this video, then please like, subscribe and share my channel, and hit the notification bell button to alert you for the latest video. For webinar and guest speaker invites, please send me a message at accountingamir@gmail.com. Remember, effective questioning brings insight, which fuels curiosity, which cultivates wisdom. If you have any question or any suggestion regarding this session, then please put them in the comment box below or by email, and inshallah, I will reply you back. Thank you so much and happy learning.